the focus of Jeffries down in Santa Monica is unsurprisingly artificial intelligence. But how does that relate to the world that you're operating in at the moment? What is it that you're keen to say while you're down there?
Well, look, AI has been takes several different modes. There's the AI that I worked with when I was at TikTok, for instance. There's a huge engine behind all of TikTok, which curates the For You page that we all see, that hyper personalizes everyone's experience. So that's a huge deployment of AI. It's made a very substantial impact in the entertainment and the technology industries, and even in streaming. If you look at Netflix and Disney Plus, which I launched, and ESPN and Hulu and all those streaming services, personalization and machine learning coupled with AI on a curation basis is massively important to deliver these personalized services. So that's something that's already been deployed. Consumers interact with it. The value is undeniable, and I think that's a form of AI which is almost forgotten given the generative AI that we all talk about today. And generative AI is also super important in the media industry. There's a creative element to it. It's part of a toolkit that now creators can use to help make their efforts more efficient. I just spoke at the conference. You could imagine yourselves in a writing room with the writers kind of with the blank page anxiety. What's this episode can be about? You might get some inspiration by typing in something on GPT and see what ideas pop up, and then you can use that to create a story behind it. And there's also some mundane uses of AI. There's voice synthesis that you can now do for dubbing versus having a voice actor. You can really train a model on an actor's voice and how they articulate what the timbre of their voice is, and create that in all sorts of different voices. So dubbing and things of that nature are uses of AI. So there's definitely an intersection between traditional media, the future of media, and what AI can offer.
The difficulty in the media industry or global Hollywood was encapsulated in the actors and writers strike, and the anxiety appeared to be about protecting human intelligence, and human intellectual property, while also sort of safeguarding jobs. This industry inside and out. What was your kind of net take on the outcome of those strikes and the agreements that were reached?
Well, I have a company called Candle Media, and part of our operations is creating shows with live actors that use SAG and the Writers Guild and all the rest. So we were shut down for much of last year. One observation is the severity of that strike was, I think, unprecedented, at least in my lifetime in this industry. And I think there was good reason for it. There is cause to be somewhat concerned if you're in the creative field, and all of a sudden there's a technology that seems to have the potential to displace a lot of what you and your colleagues do. Now, I don't think it's as dire as all that. I don't think we're going to have scripts written entirely by bots. I don't think we're going to have videos shot entirely with virtual actors that are created by AI. And I think you do lose authenticity when you go down that path. And I think a big part of not only entertainment, but also social media interactions and the influencer dynamics with their audiences is driven by authenticity. And it's very hard to be authentic and have a bot create or an LLM, be the creative engine behind what you're delivering. So that I think from a toolkit perspective, really important. From a innovation perspective, creating new ideas, new storytelling techniques authentically. I don't think that AI is going to be a threat for maybe a long time or ever. Human ingenuity is not replaceable, I don't think.
Could we discuss the real terms impact of Candle? And thank you for bringing us to Candle. I'm sure that in Santa Monica and those that are in attendance at Jeffries, there's interest. How have you bounced back post-writers' strike? I think I'm right in saying that you kind of missed your own forecasts on the bottom line or for profit, but there is a broader pullback in Hollywood spending in the long term that's related to getting the strategy right, particularly around streaming. And then there's the near-term lingering impacts of the strike. Tie that all together for me and talk to me about Candle.
Sure. Candle has two centers of gravity. One is called Moonbug, a company we bought that has some of the biggest characters and properties for the young kids set, preschool set. We have a character called Coco Melon. Coco Melon is the second biggest YouTube channel in the world at almost 180 million subscribers. and billions of views a month, close to 10 billion views a month of, collectively among Coco Melon and the other properties that we have underneath Coco Melon. So we have a very big kids business that's really nothing to do with the Hollywood strikes or the guilds that would precipitate those strikes. It's a completely separate operation. We own all the IP, it's animation, and it's delivered not only via YouTube, but also I'll say about Coco Melon, we delivered 10 episodes of Coco Melon, just taking the YouTube programming that we have, compiling it into 1-hour episodes, and that programming, available for free on YouTube, was the most streamed program in the US of any show across all of streaming from 2021 to today. So it's a very, very powerful set of properties and IP that we have on the kids side. So the kids side wasn't really impacted by the strike in any meaningful way. We bought Hello Sunshine from Reese Witherspoon and
Yes.
added in a bunch of other live action studios around it. Of course, those were shut down during the strike. There was no way around that. And I will say, it's kind of like you have a whole lot of planes that landed, and now they all have to take off again once the strike ended. And so the logistics around the bottlenecks inherent in trying to get these planes to take off and get back into the air and start those projects going, there's just a little bit of a logjam that's happened. So it's going to take the industry the rest of this year to probably work through all of that to get back to a normalized year in 2025. And I think we're not the only ones kind of seeing that. I think the entire industry is. But in terms of the content, in terms of the marketplace into which we sell and where we create, it's large. There's over $100 billion of spend around the world on non-sports content, the type of content we create in our live action studios. And whether that's growing at 5% or 10% or declining at 5%, given the vagaries of what's happening in the industry, doesn't really matter. We're a very small player, and a little bit of market share gets us a huge amount of revenue growth. And as long as we do our business well, create undeniable content under the brands that we now have, and deliver that to audiences, I think that we're going to be in very good shape.
If we continue with the Coco Melon case study, is that continuing to see growth? Or is it a kind of content offering that's peaked to your mind?
No, it continues to grow around the world, actually. Kids properties are a bit different than adult properties are. Kids properties can last for decades. I was at Disney for a long time. I just point over there to prove that point. But not only there's a bunch of other content that's delivered via other Hollywood companies to kids. And if you have a successful property, it can go on for a very, very long time. Kids like to repeat view all the time. And of course, when we do our job correctly and understand the changes that are happening in the algorithms at YouTube where we're delivering it and appropriately optimize, we're able to work with our partners at YouTube and our partners at Netflix and other streamers to definitely optimize that audience. So we've seen continued growth, even though we're as large as we are and getting billions of views a month, we are still growing. Our market share is still growing within the Made for Kids segment on YouTube. There's a bit of a change happening at YouTube. The traditional landscape video is giving way to vertical video as they compete with shorts against TikTok.
Yeah, shorts.
And yes, and so we're building our shorts business now also, and that will start to monetize at some point in the near future, we think. So I think we're in good shape, still growing, still highly relevant to kids around the world.
One thing I see in the realm of animation and also in video games to find continued growth is to do a movie. Coco Melon movie. Talk to me about that. And I also guess, franchising in terms of toys, products. This is a kids market.
It is. We are planning a movie. It hasn't been, I don't think, officially announced actually, but there's a movie coming up, hopefully, that will be either theatrically released or be on a streaming service. I'm thinking it could be theatrically released, and that would be great. That's probably in 2 years. We'll have a Coco Melon movie. And you're right about licensing and merchandising. When you have the reach and depth of engagement that we have with our properties, with kids and their parents, by the way, there's a huge amount of co-viewing of Coco Melon and other properties. Something like 40% of all views are also seen by a parent, and we've done the work to know that for sure. That does lend itself to developing a whole set of licensed properties that are based on that character. Toys, T-shirts, soft lines, bedroom accoutrements, all the stuff you'd expect. We're in all of it.
Kevin, you've mentioned it several times over the course of the conversation. I'm sure it's come up at Jefferies, and it's a big part of your history and your present. It's Disney. Who do you think should be the next CEO of Disney? And I'll jump in and ask if you'd throw your own hat into that ring.
Well, I'm pretty busy. I have a tech fund that I'm working with. I'm a co-founder of. I have Candle Media. I'm doing some other stuff. And Disney has a very, very solid set of leaders below Bob. So they have a great bench. They have people that have been there a long time that really understand the Disney culture, the Disney value and prominence and dynamism of brands. And I think most likely they'll go internal and they have candidates that I think are wonderful. So that's where I think it's going to go. And my hat, I have not tossed my hat in the ring, actually. So, I'm doing my thing at this point.
I appreciate that, and I hope you understand why I had to ask. Where I want to end it is, I think that looking at your CV, frankly, and where you're operating right now with Candle, I still don't have a good understanding of how you run a streaming-based business that is profitable. So if you take Disney as an example, the strategy of the last year has been to raise prices on the consumer side and be more disciplined on the content spend budget. You obviously are sitting on the other side of the table from those that are running the platform, but how do you answer that question? And I wondered, in Santa Monica, do people ask that at the Jefferies conference? Because it's a question that I get still all the time. How do we make streaming profitable?
Well, I think it's on top of people's minds around, we're in Los Angeles. This is the entertainment capital of the world, and this is where people talk about such things. So yes, it's talked about here. Can it be profitable? The answer is clearly yes. Just look at Netflix. Netflix has strong double-digit profitability, and not only on an accounting basis, but they have very strong cash flow these days. So there is a path to profitability. There's no reason inherently that I can think of that if you provide value to consumers in a very powerful way, the way a good streaming operation does, that you shouldn't be able to make a fair return on that capital. And so I think it's been proven by Netflix. I think you'll see other companies. I think last quarter, Warner Brothers Discovery with Max was profitable. I think I saw in an earnings call that they expect that full year profitability in 2024. The Disney folks have been talking publicly about becoming profitable in the last fiscal quarter of their FY24 also. And I'm sure if they say that they reasonably believe they'll get to that point. So I do believe a scaled global operation where you are titrating the content expenditure carefully, and I think that has to happen. You can certainly overdevelop and overspend on content. You can overdevelop and overspend on marketing and tech deployment as well. I think that there's a healthy focus on margins these days. It's not growth at all costs. That's healthy for an industry, I think. But I do believe you'll see several emergent profitable platforms that are global in nature. Some of the ones that are less global, that are domestic only, that don't have the scale or the growth prospects that that Disney and Netflix and Max have, that might be a little tougher. But I do think there's nothing about streaming that creates doubt in my mind that it can be an inherently profitable and growing business.
Kevin Mayer, let's end it here. There are many streaming platforms to choose from. You kind of summed it there. One of the names you didn't mention, for example, was Paramount Plus, and Peacock is one that I think about a lot. Is there a world in which all of these survive independently, or do you see some consolidation? And I know you must get asked that all the time by the financial press or financial networks like ours. But again, I point to the idea you're sat on the other side of the table, the content creator, and you've got some power and interest in where it's distributed.
Look, I don't know what the future of Paramount Plus and Peacock are. Obviously, I don't have a crystal ball. I do think that there's a scale issue with them. I do believe not every single studio can have an associated streaming service that has the same prospects as a Disney or as a Max or as a Netflix, or an Amazon for that matter. I left those out, but that's obviously been a huge player, as is Apple TV Plus. I do think consolidation is inevitable. That is just natural economics 101. When industries start off and everything's about growth and cost of capital was very inexpensive back when Netflix started the ball rolling. I think that there was very free access to capital and a lot of patience on behalf of investors. And I think as the industries mature and as you're starting to penetrate more households and as natural growth starts to level off, always consolidation happens, and then you have to start focusing on costs and cost synergies and the synergies inherent in possibly in mergers and the like. And I think that is a natural course for any growth sector to evolve into. And I think that's what you're saying in streaming. It will happen there too.
Kevin, I'm pushing my luck here. I'm being told that we got to go, but I would be remiss if I didn't ask you about TikTok. Just your assessment, having been inside and now on the outside, of what you think will happen. I know you don't have a crystal ball, but you know, the political will is to a divestiture of US ops, and TikTok seems to think that domiciling US user data in US-based servers is the answer.
It's hard for me to call. I haven't been at TikTok for several years now, so I'm just observing it the way everyone else is observing it at this point. I will say this about TikTok: it's a great team. It's an independent company, although it is Chinese. It is not, you know, as far as I know, run by the government in China or anything else. I don't know. I'm not familiar with all the different security concerns that our government may or may not have, but I do know that the folks that I dealt with at TikTok were high quality people. The product is obviously super impressive and engaging, and has taken over large parts of the media and social media landscapes already. I don't know what's going to happen. It does seem to be bipartisan, more so than most issues these days. So it's going to be interesting. I hope the right thing happens there.